Okay, everybody, let's get to the Q&A for today. This one, I've been having good success recently with the US dollar-yen pair. It appears that this pair has even larger moves than the pound US dollar, even when you consider that each pip is worth less at about 80%. My main question is, you have explained what is the best time to trade pound US dollar. I'd like your feedback on what is the best times to trade the US dollar-yen. Well, first of all, you have to remember if the pips are worth 80% less than they are on the pound, you're going to have to make a close to 100% more on a move just to break even, meaning in order to make the same amount. The other thing to consider is that the US dollar yen trades in the Asian session, which runs from about 7 o'clock at night all the way through roughly the New York Open. I mean, you'll have some activity from 9 to noon, just like you do in the U.S., but from about 7 to about 9, you can get some action, but realistically, the sweet spot runs from 7 p.m. Eastern to about 2 a.m. Eastern Standard Time. The second one is very similar and for some reason having more luck trading the yen-euro and the US dollar-yen. Mostly hitting stops on the pound dollar and making the money back on the other pairs. This is making me think that I'm missing something, as it works on two pairs and not the other. This is, what you've got to realize, folks, and I've talked about this before. There have been a couple of trades which I've looked to take, which have gotten stopped out. The one which I looked to take last night, had you just blindly put it on, you would have actually gotten stopped out on both sides of the trades. But you have to remember, first of all, I talked about you've got to be careful of the volatility in the trades that have gone past. The other thing is, and I've talked about this before, anytime, and this is something that really hits home with rookie traders more than anybody else. Rookie traders, when they start taking stops, they will question the entire system. And that's exactly what's going on here. This person says, this is making me think that I'm missing something. So you took two stops in a row. How many times do you think out of 100 trades you're going to lose? And if you say, well, I should win 60 times out of 100 and lose 40 times out of 100, somebody who then tells me, well, I've gotten stopped out of a couple of times, am I missing something, obviously doesn't understand what this could mean. This could mean you take 5 wins in a row, then 3 losses. It could mean that you take 5 losses in a row and then have 3 winners. You don't know how these 40 losses are going to come about. So you've really got to get a handle on that. Now the stops are at least 30 pips on the pound US dollar, so didn't think it's a case where the stops are too close, except overnight orders should maybe be higher on the stop. No, the stops need to be dictated by the market. Not based on time or anything else. Maybe this is too general a question. If so, let me know and I'll send specific trades. I don't necessarily think that it's an issue of being specific. I think it's an issue of, number one, expectation, and number two, understanding what you're getting into. Next question. One question I have is that on the video you state on the 1-hour chart to time your Little Dipper entry, is it acceptable to go down to the 15-minute? Absolutely. Just keep the 1-hour price supports in mind or on your chart. In other words, if you're looking at your MetaTrader charts and you've put your Fibonacci for your Little Dipper on the 1 hour, make sure that you use that chart and go down to 15 minutes so that they're there. It's perfectly acceptable to go down to a 15-minute and look for a 3-bar reversal. Long trade at 2.0187 got stopped out at 53 pips. Don't really think you answered a lot of people's, including me, question. I believe the question is really this.